Autoline After Hours is brought to you by Bridgestone Tires, solutions for your journey. And by Borg Warner, propulsion solutions that support a clean, energy-efficient world.
Gary.
John, how are you?
I'm doing well. Yeah.
So here we are living the classic Detroit environmental seasonal change where we're going to go from furnace to air conditioning, just like that.
That's right. Goodbye, spring.
Mm-hmm. That's right.
Hey, we got a great show today. We got who I think are the two best automotive reporters in the business. So why don't we bring them in right now? We got Joe White from Reuters and David Welch from Bloomberg. And great having the both of you guys on the show right now.
Great to be here.
I think you meant the two best journalists in this square frame.
In this square
besides
frame, right.
you and Gary.
Yeah. Thanks for the kind words.
Hey, I mean it. I mean it.
No,
I appreciate
think you
it.
guys are the best. I'm dead serious about that. Better than me, I'll say that.
And I would add that they're the smartest, so they'll make us look good, John. So that's
Yeah.
what I'm hoping for.
It's a high. Right. You're setting a high bar. Let's see how it goes.
Right.
It's all downhill from here. The whole show you've created unreasonable expectations.
Yeah, the audience is going to think, what was McElroy saying? These guys are doofuses.
I think unreasonable expectations is a theme for the show. Yes.
Yeah. Well, okay. So let's start
gets
there.
us to our next subject.
Yeah. So there were a bunch of earnings reports that came out of the likes of Fisker and Rivian and Lucid this week. And since you guys are the business reporters, talk to us about how these new startup EV companies are doing.
David, why don't you go first on that one, and then I'll
Yeah, sure. So we'll start with Rivian because the stock was roaring because even though they lost a lot of money yet again, it was less than the street thought, and they affirmed that they were going to make maybe 50,000 vehicles this year, which, in the grand scheme of the auto industry, 50,000 vehicles in a year is nothing. But GM's going to make 80,000 or 70,000 Ultium vehicles this year, another 80,000 Bolts, but that's going away. So, that's not bad production. But, looking ahead, that's also not enough to generate cash to build a huge lineup of vehicles and become a self-sustaining car company. And they're going to have to raise money eventually.
So have they turned the corner?
Geez, I don't think so. I think in this kind of market where it's very difficult for companies to raise money, startups, they have 11 billion in cash. So they don't need to raise money.
Hey, and that was one thing. They didn't burn through much cash in the last.
No, they didn't.
Well,
but they
raised
CapEx a lot, and the CapEx is all. So they spent 240 million or so in CapEx, but the budget for the year I think is over $2 billion. That means their CapEx spending is backloaded second half of the year.
And they also raised money, I think. They also raised money that was then kind of netted out. I mean, my feeling about Rivian, with all due respect, is that they're sort of like the Detroit Tigers, right? They have a losing record, but because everyone else in the division is so terrible, they're in second place. And I think, right, David? I mean, it's the other companies in this space, Lucid, Fisker, had much worse results and cut their forecasts. And I think the street did not like that.
That's right. And I think in Fisker's case, they even delayed a launch of the Pear, I think, right? Or one of the vehicles. So
yeah, by a year.
Yeah. So look, this electric vehicle thing is hard. And I know that sounds maybe a little bit flippant, but think about it. I mean, the GM Ultium program is, in terms of volume, way behind where we thought it would be. And they're finally getting that going. And Mary Barra says this will be their breakout year, but it's behind. Toyota, the BZ4X, the wheels literally came off the car. And look, give Toyota their props. They're probably the best manufacturer in the world. Everybody copies the Toyota manufacturing system, and the wheels fell off their EV. So you have these startups with far less experience, new plants or retrofitted old plants, not nearly as much money, and it's really tough to do. So, I look at these companies and they have delays, which means it's just that much further, that many more years out before they can generate their own cash. At some point, all these companies need to be self-sustaining. And to Joe's point, kind of talking about Rivian maybe being the best ballerina in Galveston, they have a lot of money. And they're further along in production. So they have the best chance of making it. But all those other companies are at much higher risk. Lucid's kind of somewhere in the middle. They've got a decent slug of cash, but not enough for them to not have to raise money in the next couple of years.
No, they said they'll run out of money in a year.
You'd have to run out of money in a year. No, that's right.
I mean, what I mean is some of these other guys may run out of money.
Manufacturing that's causing trouble. I mean, look at Polestar and Volvo. I think today both basically said they're going to delay the launches of their respective electric vehicles that they've promised in because they can't get the software, or Volvo can't get the software right on the common platform. Volkswagen is struggling with software. So in addition to sort of the kind of physical stuff that automakers are used to dealing with, you have these software challenges that a number of these companies are finding difficult to manage. It's very hard. I mean, I remember, and David, you probably do too, a few years ago, there was this idea that, building electric cars is simple. It's like putting together a smartphone. There's no barriers to entry whatsoever in the auto industry. It's going to, well, you know what? We've learned a little bit that there still are barriers to entry. They may be different, but they're significant.
Well, speaking of putting together cell phones, I mean, we haven't mentioned Lordstown, which is operating at the Foxconn plant, and they're not doing particularly well either.
No, they're not. They use the words Chapter 11 in a sentence in a filing, which is not good. Look, maybe they'll find the funding, but it seems like Foxconn has decided that they're going to be better off without Lordstown as a partner, because it's Foxconn's refusal to come across with a promised investment that's put them in the box that they appear to be in right now.
Yeah, hey, David, Lordstown Motors is their entire reason for being was the endurance pickup truck with the hub motors on each wheel. And they said, even before this going concern notice that warns about bankruptcy potential, they said they weren't going to make that without another partner besides Foxconn, a large automaker, who could give them, purchasing scale and that sort of thing. So Lordstown doesn't really have anything. They do have some engineers and that sort of thing, but they don't have a product that's coming. They're hanging by a thread, and if they can get someone to be an angel or somehow, coerce Foxconn to stay in, which I don't think is going to happen. So Lordstown is probably going to be the first casualty of that whole period of SPAC-driven, let's call it the easy money era for auto tech.
Hey, David, I got a question for you. Fisker went after you guys at Bloomberg. He did not like your reporting at all. In fact, the reporter who wrote the story about them, Sean O'Kane, he said it was another lie from Sean O'Kane. Really went after Bloomberg. I'm just wondering, what was the chatter inside Bloomberg about all this?
We were a bit bemused by it. I mean, he didn't outright deny the facts Sean actually reported. And
so what were they? Look, for the audience that's not familiar with the story.
Let me pull it up for you if you want, to really get into it. And
you can talk off the top. What you guys said was that the two cars that they've delivered have got to go back to the factory, which he denies vehemently. And you also reported that they had to have software that ran the vehicle slower. And he denied, of course, that the vehicle's running slower.
I don't think he denied that exact fact. I think what he said was that they weren't delaying their vehicle for that reason, but he didn't deny that was actually happening. I mean, look, we didn't correct anything. We didn't retract anything. We stuck by the reporting, and they're not getting their cars out on time. So, they can bang the drum all they like, but they're simply not getting product out on time.
I think there's one thing too that I think we're going to keep. There's a lot of moving parts to all this, but just quickly, I'll say this: it matters that these companies are not fielding the product, because while they're not fielding product, Tesla is, and Tesla is resetting the price levels in the sort of in the core of the EV market right now. They're also, and I'm going to credit Morgan Stanley for this, they had a report, I think yesterday, that looked at how much money Tesla stands to gain from the Inflation Reduction Act subsidies, and it's a huge amount of money. It's 40+ billion. I'm doing that off the top of my head, but it's something
I think it
like
was 47, Joe. It was a
47.
crazy number.
Yeah, across by 2030. So, you start piling. I mean, Tesla starts piling up that financial advantage, and Morgan Stanley focused on the. What happened?
You're still there.
Okay,
You're there.
my
Yeah,
screen
you're
went
fine.
dark. Morgan Stanley
Okay.
focused on the. There I am. Morgan Stanley focused on the threats to GM and Ford. Sure, but before GM and Ford get run over by this, I think some of these startups might, because they have less financial flexibility. And so I think there's a real risk here if you're not out there, harvesting this money that's on the table, and somebody else is.
So, David, you mentioned the situation of Toyota with the wheels literally falling off. And if we look at the deliveries that General Motors basically hasn't made of the Hummer, if we look at, the Ford's problem with the Lightning. So here we have these traditional OEMs that are having serious difficulties, obviously, in terms of producing vehicles at the cadence that we've become familiar with when it comes to internal combustion engine products. Is this something that is because they're just not familiar with EV technology, or is this possibly something else? And the something else I'm thinking about is like trying to hurry up and get things done.
Look, I think it's both. First off, you look at like the Hummer's been grounded for weeks in the battery pack, right? The Lightning was grounded because there was one fire. You do see lots of barbecues along Southfield Freeway in Detroit, that are internal combustion vehicles, but those are usually some guy's 18-year-old car with an oil leak or something like that. It's, internal combustion vehicles don't brand new or a couple years old spontaneously catch on fire like some EVs had. And those EV fires are very rare, but the car companies take them seriously, and they look for problems because the Bolt was such an issue, and Tesla's had fires too. Batteries are new to these guys. They even though their suppliers have been making batteries for cell phones and other things, these are much bigger batteries. They run a lot hotter. Obviously, a lot more power on board, and they're out there in an environment with potholes and snow and hitting bumps and all kinds of mayhem that your phone doesn't go through. So I think there's a big learning curve there for everybody, including the battery makers themselves. And then everybody is rushing this, and they're rushing it because for the longest time, if you didn't have a great EV story that was getting fully engaged, nobody wanted to buy your stock. Now it turns out that even if you have that, they don't want to buy your stock.
Right.
Which is another story in itself.
Yeah,
investors don't like auto companies, period. They like Tesla and they don't like the rest of them. So this whole thing of trying to pander to a bunch of investors to get them to like your legacy auto company stock it's like the sign at the bar that says free beer tomorrow. It's just not going to happen.
Yeah, I'm going to look. I think last time I looked, and maybe I'm wrong, but the last time I looked, GM was below its IPO price. Or very close to it, despite everything. Despite an enormous amount of effort on the part of GM to obviously have the price be much higher. So David's right. I mean, it seems like EVs alone aren't going to do it in terms of the share price. The one thing I just would amplify on David's point about the production challenges, I do think also many of the problems we've seen have to do with suppliers struggling, and not just chip suppliers, but suppliers of every kind of thing. I mean, I think the Wall Street Journal reported this. Ford had a problem getting door handles. It's just all it takes is one part. That has not changed, and I think some of the suppliers are really struggling with some of this technology as well.
Yeah, they're just struggling. Right. I mean, volume's down so much. Production volume's down so much. Car companies have raised prices, which protected them. Suppliers have not really been able to raise prices much. I mean, the car companies do their best effort possible to keep those prices down.
Right. That's absolutely true. There's a lot of pressure.
So, so far Ford is the only automaker with the guts to publish how much money it's losing on EVs. So there's my question. I'll start with you, Joe. How much longer can these guys afford to lose money on their EVs?
That's a great question, and I think, I think the answer is obviously not that much longer and not forever, and that explains, among other things, that explains the pushback that the auto industry's lobbying group delivered in Washington to the Biden administration's proposals to go 67%, effectively go 67% EV by 2032. And you saw the auto industry, the Alliance for Automotive Innovation, essentially say, we're not on board with that. We think that's too much, too fast. And there's probably a million reasons why they would say that, but one of them is we're not making money on these EVs. As you said, Ford has projected a loss of $3 billion. They say they're going to break even. I think it's next year on some basis, on a contribution margin basis.
Right.
That's still not earning your cost of capital. And in the meantime, the vehicles that make the money at all three of the Detroit companies are big combustion pickup trucks and SUVs, and that just is a fact. And yes, Elon Musk makes money on his electric cars, but as far as I can tell, he's the only one doing so. Well, BYD is doing it in China, but in North America, among the North American OEMs, I think he's the only one making any kind of real money. And he's now suborning his own pricing in order to gain market share. So where does that leave everyone?
Yeah, look, I look at what GM says, right? They say they can start making money on their EV programs mid-decade, and they can match internal combustion profits, but that's if you add in a bunch of incentives from the Inflation Reduction Act. It's not the 7,500 that goes to consumers; it's the automakers take. And GM said I think it's 3,500 to 5,500.
Right.
So that's the price bogey, or that's the profit bogey, I should say, that everybody has to make up. And if GM hits the targets they say they're going to hit by mid-decade, they'll be producing more of these vehicles than probably everybody except Tesla. And they still, even with that kind of scale, need government money to make up profits. So, look, it's going to be a while before everyone's making money on this. And I think there are a lot of reasons why a lot of these forecasts on EV sales and market penetration could come up short. I'm not sure the consumer demand is going to be there in the mass market. Right now, it's penetrating the luxury market, but not the mass market. But the automakers themselves may pull back on some of these plans if, depending on where the economy is and where their profits are from the rest of their business.
Yeah, that's definitely something to watch. And another thing to watch, and I'm going to say the word politics once, I hope, in this, but I do have to say it once. All these incentives and subsidies are at risk with each election cycle. And I mean, again, we see that these subsidies are part of the discussion now in Washington on the debt ceiling, is my understanding. I mean, the whole Inflation Reduction Act. So it's difficult to make a 5 to 10 year CapEx plan when a big part of the money is up for review every 2 years, depending on who wins on a political election.
I think the money will still be there. And the reason I say that is the auto industry has bet so heavily on electrics, so heavily. And there's so much investment coming into the U.S. right now because of the IRA. I call it the California gold rush or the Oklahoma land rush. It's astonishing how much money is getting invested in the EV sector. And even though a lot of dealers don't like EVs, a majority of them are investing in EVs. And so for Congress to come in and rip the rug out from under them, I think you're going to have a united front. Throw in labor too. So you're going to have labor, the automakers, and the dealers all saying, don't touch that money. And, the most important of all those three groups are the dealers.
Well, those are good. That's a good
anyway.
Point. Right. Yeah, that's a good point. So, right. But I don't think there will be no fight over this. There will be.
There will be a big fight. Right.
Yeah.
Yep.
See, but John, there's the issue, as has been mentioned, that there's really no sense of what the actual consumer demand is for these vehicles. And if you're a dealer and you're able to, sell every regular Mustang that you can possibly get delivered to your store, and, you're having an iffy chance with EVs, then they're not going to push back.
Well, look, right now amongst the legacy automakers, there's very little choice, and it's all expensive stuff. And so as new models start to come out, it's going to be, let's see what this Chevrolet Equinox does when it hits the market. And, they're talking a $30,000 base price. Certainly you'll be able to buy it for under 40. So then we'll start
That's
to
the
see
big test right there.
right.
Yeah,
That's
agreed.
going to be a big one.
As Mary Barra says, the EV market, you have for a lot of current owners, they have 3 vehicles in the garage and only one's an EV. So, you're not going to solve climate change selling a 3rd and 4th car to a bunch of rich guys. So you have to get the mass market involved, not only for climate change, but to get scale in the business and start to drive down battery costs and costs of electric motors and inverters and all that stuff. And, the Equinox, the first version out won't go for 30,000, but it will be under 40. And the Blazer will be like 45. These are all, let's call it average new car price or lower. So the people for whom this vehicle is their only driver, do they sign up for electric? That's and GM's not the only one. Obviously, there are others with cheaper vehicles, cheaper EVs coming. That's the big test right there.
No, it's true, and I would also add this. I mean, in Europe, you're seeing this happen where the Chinese EV companies are coming in with very, very much lower priced EVs. And the argument in favor of letting them do that is, well, if we're going to ask everyone to drive an EV, these are the affordable ones, the ones from China. Well, again, sorry, I said this twice. Try that out politically in the United States. Right. I mean, the minimal number of Chinese EVs that are coming to the country under Western brands now, GM, Ford, Volvo, you start having kind of a mass market influx of Chinese-made EVs. Let's see what happens, right? So it's going to be a complicated couple, 3, 4, 5 years to see how all this evolves.
But Joe, does that get to the point that if there is a vehicle with a low price point, that consumers will automatically flock to it, or will they basically say, you know what, I think I'll go buy a Civic or an HRV or something like that instead?
Well, that's the question, right? I mean, I do think that. I mean, the EVs I've driven, I have come away thinking, wow, these are pretty great. They're really nice. Of course, I haven't had to try to find charging for them because I'm running around here in Detroit. And but yeah, I think that's the test. If people get in, if low priced, genuinely sort of affordable to a sort of a middle class buyer EVs start to come on the market in quantity, and the charging kind of starts to develop, does that get you to a point where you see it happening in China and some parts of Europe where all of a sudden it's 20, 30, 40% of the market? That's the question.
I thought it was interesting, talking about lower price vehicles, that so Ford reopened the books to start ordering the Lightning again. Okay, so they had been closed the books and started working through the orders that they had. So I went to the Ford consumer website today and looked, and the first thing that struck me was that the first vehicle that comes up is the Ford Pro Lightning, which starts at $59,974. That was the one that started below $40,000. How many months ago was that? Okay, so there's been an enormous thing. So then you read on to go to order one of these vehicles, and it says that basically the Ford Pro Lightning is not available for ordering. XLT, Lariat, and Premium R. So that's $64,474, $76,974, or $98,074. I mean, it's just like, okay, we know that we can build these things, but if we build them for the higher price point, we're going to get better margins and perhaps lose less money. I mean, is this the MO that companies are going to have?
Well, it certainly is. If you look at the Hummer, and I mean, it's grounded, but the first versions out there were pretty expensive, and the vehicle itself is not cheap. It doesn't qualify for any of the IRA money because it's too expensive. So everyone has to start on the high end, but that's not a unique thing, right? I mean,
they do it with ICE vehicles.
Cars started off in Packards and Cadillacs because you couldn't get the price in a Chevy or a Pontiac. The high technology, new gadgets always start off in luxury vehicles and work their way down because you can bury the cost in luxury margins. But the problem here is the ramp up that the government wants and that the industry has told their shareholders they're going to deliver requires them to get electric drive push down the chain of consumer buying a lot faster.
Yeah, and there's a couple of risks here for the industry, right? Which is if you have if you go back to 1905, where cars are low volume rich people's lifestyle vehicles for rich people, you have an industry that's not 15 million or 17 million. It's 8 million or 9 million. It's a lot smaller, and so all the factories and all the people suddenly you don't need. So that's a problem. One good thing going for the Detroit companies and for Tesla right now is that again, the IRA amounts to a sort of a protectionist barrier, not only against the Chinese cars I mentioned earlier, but also the Korean cars, the Hyundai and Kia, who do have low-priced EVs, quite attractive ones, I think. But they don't get the consumer incentives. So there's kind of a trade barrier there that's protecting the domestic EV producers for the time being, and helping them keep their prices high. Kind of,
because there's that big gaping leasing loophole.
Well, right, and we'll see how that ramps up. I mean, I was looking at Hyundai sales. I mean, the sales of their EVs are still down. They haven't, but right, I'm sure that they've got people working overtime trying to figure out how to get the leasing capacity to the point where they can get back in the game.
Was it Hyundai or who came out this week and said they wanted to double their lease rate? They're bumping along 15% of their customers now lease. They want to get that to 30%, and I'm sure that's going to be all EVs.
Someone did. I'm trying to remember who it was.
I don't remember who, but I'm not surprised, because you're absolutely right. There is leasing and commercial sales are big loopholes, and so to the extent that these companies can exploit that, I expect they will. But for the moment, I mean, I've been watching, and I think it's fair to say that Hyundai's electric vehicle sales have taken a pretty stiff hit since they lost the access to that consumer rebate. So that's helpful, and I think it helps kind of provide cover for the sort of premium pricing that we've been talking about.
The same thing happened to the Bolt, right? I mean, when they lost the incentive, they dropped the price by $6,000, and that's the only thing that helped sales recover, because sales were really taking a hit before that.
Right. But and unfortunately for us, GM does not publish their EV profit and loss as a separate number. Be fun to see.
So last week, Mercedes CEO Ola Källenius said that he was pushing back the time when Mercedes would have 50% of full electrification. And he was talking about PHEVs and EVs, not just all EVs. And they had said by mid 2025. Now he said it's the end of 26. So, here's an executive who is like saying, this is what the reality is. Is he rare in this industry, or do the other people really think that their expectations are going to be fulfilled in terms of the percentages of EV sales?
I think I don't think he's going to be the last one to do that. I think he's the first, because his deadline comes up pretty soon. I don't think GM's going to give up on it yet, but and look, I have no reason to believe that anybody else won't. But as we've seen with all the technologies that have been all the rage in the auto industry for the last, call it 3-4 years, every bit of it's taking longer. Charging systems, self-drive, electric vehicles, it's all taking longer to get into production. In cases of autonomy, it's taking longer to work and much longer to find a business model for it. And the whole all these charge companies out there, there's a lot of slow work being done there too. And that's really important. If you're going to get into the mass market, you don't need a charger on every corner, but you do need them in places. You need them out on the highway. That may be an edge case, the road trip, but people aren't going to buy an EV as their sole vehicle without that. So I think all of these factors, throw in interest rates, threat of a recession, you're going to see more companies throttling back on those targets.
Yeah, I agree with that. I think all of the things that David mentioned are obstacles, and I think that the technology is proving difficult. Mercedes is overhauling the entire software stack for its next generation of vehicles, and that may be taking them longer than they thought to get going. BMW has been very conservative, and they're talking about 50% by 2030, I think. So some of these companies, and Toyota obviously is sort of in the same boat. They've been relatively conservative about this. So yeah, I think it's proving difficult for all these companies to kind of stick to these original aggressive timelines.
Hey, look, we've got to take a quick commercial break right now. Plenty more to talk about. I got lots of questions for you guys, but we'll be back in just a moment.
How do Bridgestone tires stop shorter on wet roads? It's their HydroTrack technology. But you don't have to know how the science works, just where the brake is. What really matters is their Bridgestone.
The world is changing at an ever-increasing pace. No matter what the mode of transportation, there is always the need for an efficient propulsion system. And that's exactly what BorgWarner has been doing since the earliest days of the automotive industry.
Well, thank you, Bridgestone and BorgWarner, for all that. Okay, back into the discussion. So I got a question for all three of you right now. Why are the Detroit 3 reducing headcount? White collar and blue collar, depending on which company you're talking about. I don't know if you saw it in the Detroit News this week. There was an op-ed piece from Patrick Anderson. I think he's got Anderson Economic Consulting or something like that. He's blaming EVs. He's saying that EVs have led to this headcount reduction. I just wanted to get your guys' reaction. What do you think, David?
I think that's part of it. You're talking about companies that are, in the middle or maybe at the beginning of massive capital spending on battery plants, EV assembly plants, mining deals, all of that stuff. We also have higher interest rates are affecting vehicle pricing, and or actually I should say, they're affecting vehicle affordability, which puts pressure on what automakers can price, because they may have to drop. They're already dropping prices a little bit. They may have to drop it more. Everyone's profits are pretty good right now. But if I'm Farley or Mary Barr or I'm Carlos Tavares, I'm looking at how much I need to spend and some potential choppy waters with the economy and vehicle sales here, and I'm trying to get out ahead of the curve. But I mean, Tavares has been pretty open about the fact that the cutbacks they've made have been directly related to the profitability of EVs and how much he has to spend. And, in the word salad that GM uses in its earnings calls, they've kind of said the same thing. And Farley's pretty transparent about the profitability of Ford's EV program. So I don't think he's wrong. I don't think that's the only thing going on. I think when people don't like EVs for political reasons, they blame everything on them. But it's a massive CapEx bill, capital spending, and they're going to cut everywhere they can to afford it.
There's another dimension of that I agree with all of that. There's another dimension that I might add, which is that I think there's a powerful concern at the top of all these companies that they've got. And again, I think Jim Farley has been the most outspoken about this, that they need to get new people and new types of talent, new generation of talent with different skills, software skills, electrical engineering skills, all that into their organizations. And so you're seeing, I think for all the companies, but Ford and GM for sure, basically offering senior people. It's like, look, take a package, leave, God love you, and then at some point, I think maybe when the economic outlook is a little brighter and clearer, they're going to hire people who are younger and have entirely different skill sets. And again, they've been reasonably explicit about that motivation, but that's, I think, part of this as well, is take advantage of the opportunity that's presented by an uncertain economy and these other factors that David listed, and to sort of roll the workforce and bring in a new look.
See, I think they're kind of using EVs as an excuse, because when you look at the blue collar reduction at Stellantis hasn't even started to build EVs yet. And, when you look at the idling of the Jeep plant in Belvidere, Illinois, which makes the Cherokee, take a look at the sales of the Cherokee. I mean, they absolutely collapsed last year. I want to say they were down like 70%.
Yeah, they're down a lot.
Yeah. I would blame the Ford Bronco line before I blame
Well,
EVs on all this.
yeah, John, I agree with you about that. And again, I think, I mean, each of these companies is kind of they're not all the same, right? They have different drivers. I mean, Carlos Tavares. So Jim Farley's been probably the most outspoken about sort of the talent gap issue. Carlos Tavares has been, I think, the most outspoken about a more fundamental issue, which is capacity. And he's been talking about overcapacity in the industry for quite a while. And
it turns out it's his.
Well, yeah, and it turns out in this particular case it's his, but and it may not be the last, but he's not wrong. And to some extent, I think he's looking around saying, "Look, I got a very tough union negotiation to go into. I'm gonna set the table the way I want it set, and act on truths that he has said pretty explicitly he believes, which is there's too much capacity. Some of it belongs to him, and time to deal with it."
See, but it's interesting. So Auto Forecast Solutions had a recent chart of capacity utilization. And John, you're the expert on this whole thing. And Toyota and Stellantis were near the top, and the rest of them were, bumping 70% or below. And isn't it 80% that you need to have?
General rule of thumb, although, Stellantis North America claims its break even is 30%. So, which is an extraordinary number.
But basically, this means that they have a whole bunch of people that are not doing as much as they possibly could. I mean, if you're operating in a plant at 60% capacity. So this gets back to David, you said early on about how there's this real focus on Wall Street that the traditional OEMs have, trying to get themselves in a situation where they're perceived as being cool, hip, and electric, and so on. And, by cutting the number of workers, they might argue, well, we're more efficient, we're more lean, we're more capable, therefore we're more valuable. So invest in us.
Yeah, well, touch on John's point for a second. In the case of Stellantis, they're like cutting factory workers. That has nothing to do with EVs. But all of these companies have cut white collar people. And that's leaning up the organization. I think Joe is right. There some of that is getting rid of older people with a different skill set than the newer people you want to bring in for this whole EV paradigm. Gary, the markets thing is kind of funny. They for the longest time you had to have an EV story, and investors didn't like conventional auto stocks because all these plants they have are dead capital. They're making vehicles that one day will be completely irrelevant and nobody's going to want. Except that for the most part, all the plants that like GM, Ford, and Stellantis have will just be repurposed, and those workers will be retrained to assemble EVs. The battery plants are different. They'll have to get rid of some powertrain plants over the next probably 20 years. But the dead capital that the street doesn't like will erode very gradually. And actually, here's one thing that I think Paul Jacobson, the CFO of General Motors, is right about. I'd rather be GM and Ford and have this business that generates a whole bunch of cash selling SUVs and pickup trucks to fund my EV factories and EV changeover than be somebody like Lucid or Fisker and have to go out and raise money in a market like this at very high interest rates or very high capital cost for the equity. If you can get it, who'd want to be in that position? So the conversion will be, John said earlier, it'll be funded by all of this. But it's also like not every factory, not every asset that the car companies currently have is just this totally irrelevant thing that'll die. It'll just do something slightly different.
Right. Yeah, the engine and transmission plants might be in trouble, but
Yeah,
everything else is going to be needed.
Well, and some of those will be converted too. I mean, you see the companies doing that already. I mean, there's sort of, you have a machine shop, you switch it from a combustion transmission to a electric vehicle drivetrain. You can do that. I mean, if you're a dedicated piston manufacturer, the funnel is going to start to narrow. Yeah, I think that's right. A lot of these factories are going to be converted, but they're not going to necessarily have the same number of people that they have had, and I think that's the challenge that's going to be coming up on these companies pretty much right away this year is reckoning with that. What do you do about sort of the employment levels, and what do you do about kind of the nature of the work and the compensation? Because all of that is up for grabs again.
Well, a good time to bring up the topic of the UAW. What do you guys all make of Sean Feins, withholding the union's endorsement of Joe Biden running for president unless he does something about pay for these union jobs at especially the EV battery plants?
Yeah, I've listened to I've listened to Sean Fein speak in person. He was at the APA not long ago. I've listened to some of the videos he's put up on his Facebook page when he, there he is, when he was running. He is nothing if not consistent about this. I mean, he has made it clear that the status quo is not going to stand as long as he has anything to do with it. And I think that's going to be very challenging for the Detroit Three. He's, as I guess most of our listeners probably know, I mean, he's committed to getting rid of the two-tier wage system. He's committed to cost of living, much larger share of kind of the profits going to workers. And then most recently, he has raised this issue of the pay at these joint venture battery plants, and said, look, number one, they need to be organized. Number two, they shouldn't be making less money than the sort of, standard UAW assembly type jobs. They should be making more. And so, I think it's going to be a very interesting and I think possibly contentious round of talks.
Look, in some ways, there are some similarities here to the last go around when we had the long strike at GM. At that time, you had Gary Jones, who was being investigated for stealing from his own union. And he had to prove that he was there bargaining for his people. GM thought the strike was a big distraction. I don't quite agree with that, but I think it was related. I think the framing is more that he was accused of basically, feathering his own bed and not bargaining on behalf of the members. So he had to prove he was tough, so he struck GM. I think if the old guard had won, they would have to prove that they're tough. But they didn't. They lost, and Sean Feins, and he's got to prove he's tough. But there is something interesting. Not endorsing Biden in what he has said he had a webcast on Facebook a week or two ago, is he wants to put pressure on the Biden administration, to put pressure on the automakers to raise the wages in these battery plants. And he specifically said, these EV jobs they're paying for can't be lousy paying jobs. And I see where he's coming from, in that he wants to use the union's political clout to do something. And look, this guy is going to be much more active, I think, than we've seen from the union in a very long time.
Absolutely.
And if he's going to really use that pressure, and I think he will, think about the UAW. I get, Joe, you get them too. I'm sure you guys do too, Gary, John. You get these really rote press releases that always come out like 3 days after some major political thing happened. Like, the zeitgeist of that moment, of that issue, has already gone way the hell out the window. And then you get this press release from the UAW with whoever was president saying the UAW officially condemns layoffs by Caterpillar at a time when American families are struggling. And nobody uses it. Nobody ever quotes these things. This guy actually wants to apply pressure and make the union a politically involved organization. That's very interesting. And I think he will use that clout and that kind of same MO going up against the car companies. It's almost a done deal that we're going to have a strike, because unless the car companies just give him everything he wants, because he's going to have to show that he's powerful and that he's strong, and he's going to have to prove he didn't win by a very big margin. He's going to have to prove to the 49.9% of UAW members who didn't vote for him that it wasn't a mistake to go away from the old guard. There are a lot of factors here, and they all point toward a very tough round of talks and high probability of strike.
I totally agree. I don't think he's going to take yes for an answer. He's got to show how tough he is. He's going to strike.
Well, yeah, we'll see. I mean, I was joking earlier that I've called 5 out of the 2 actual UAW strikes in the last 20 years. I've learned the hard way to have some humility about how these things are going to play out. But right, I mean, again, I take Sean Fein at face value on a lot of this stuff because he's consistent and he seems to mean exactly what he says. And so I don't think he's going to be satisfied with a piecemeal or an incremental approach. It is interesting, David, you mentioned this, and I'm going to amplify it. It is really interesting to see him conducting UAW. I remember I called it a contract campaign, not contract talks, but a contract campaign. I mean, he's putting videos up about his tour of Capitol Hill the other day, where he visited with these Democratic leaders and talked about the battery plant wages. And yeah, he's trying to do something we haven't seen in the UAW in a long time, which is obviously fight for a UAW contract that improves the members' situations and lives, but also to try to kind of have the UAW be what it hasn't been in decades, which is kind of a leader for workers in general, for union and non-union workers in general, and that's something we haven't seen from this union in quite a long time, and I think he means it when he was trying to do that. So there's a lot at stake here.
Also, I think the political environment is in his favor. Billionaires have never been less hip. There's a lot of, just this kind of general feeling in this country that we've got this, bifurcated society of haves and have-nots. And I think the same situation 4 years ago, when Trump was in office, actually, when was GM's strike? 18 or 19?
19.
Trump is in office. Mary Barr was closing down Lordstown, and she closed, a couple small transmission plants in Baltimore and in Warren, Michigan. And she was threatening at the time Hamtramck. And the union was really livid about it. Trump was really livid about Lordstown. And that kind of gave the union a lot of political cover to go on strike. And I think on top of that, the union workers generally, I think, still voted Democratic, but I think Trump got more union votes than past Republicans have. This is a risk for the Democrats when the leader of the UAW says, yeah, you got to actually show us something before we get on board. Because the Democrats have taken the union vote for granted for, really everyone since Clinton. Clinton's the only one who actually, I think, the only Democrat who, when he took on the Japanese with that threat of a trade war and taxing Japanese luxury cars, none of the other presidents, Republican or Democrat, have actually tried to do much for the union since then. And look, Feins he's going to try to make sure that they actually do it, and they don't just take the votes for granted and go on doing nothing for them.
Yeah, no, I think that's right. And, I think the pressure is going to intensify as we get toward the fall. Whose side are you on, kind of thing. So yeah, I let's put it this way. I've figured out that I'm probably not taking a whole lot of vacation time in September and October. I like to take a vacation in the fall. I have a feeling I'm not going to get one this year.
Not this year.
So going forward, guys, I mean, do you think that, okay, if we looked at the auto industry 5 years from now, okay, and let's say all the bugs have been worked out in terms of the ability to make EVs at volume, is it basically going to be the same auto industry as we've always known it, or will it be an industry wherein there are just fewer workers required to do the work, and therefore, the UAW perhaps ought to be thinking about, what's next, not next week or next month or next year, but 5 years down the road.
I think so. I'll take a stab at that. First of all, I think the UAW is thinking about that, which is why Shawn Fain says and does the things that he says and does. He's very worried. I mean, and their people have been worried about the electric vehicle transition for quite a while. I mean, that's just they have very smart people working in their technical staffs who've been worried about this for a long, long time. I do think the industry will be different, and I think, barring it could happen that we see a repeat of the 1920s where vehicle prices keep coming down as scale goes up, and we get a Model T effect, and we get back to, 18 million vehicles a year. Well, then great. We have lots of people working in the auto industry, but if it stays at this level, I'm not so sure.
I think there will be fewer people working in the industry, but I don't think it's going to be in 5 years from now. I don't think it's going to be, some 20-30% cut, as people have talked about, where we've all heard EVs are much easier to produce, so they need fewer people. But I still think in 5 years it'll be majority internal combustion vehicles, and we'll be making EVs, some of them in the same plants, which is complexity. So I don't think you're going to have a lot fewer workers. You'll still have people making engines and transmissions, and you'll have people in battery plants. So, and you'll have people in mining processing in the U.S. and in some of these mining ventures, in Canada as well. So North America could actually see an increase in jobs because all this mining stuff, minerals processing, production, it's not done here right now. We like other countries to do that.
And it's coming onshore because of the IRA, or will do.
So IRA will bring that stuff. Yeah. So you could see more people. You may not call them auto workers, but they will be working for this industry, making lithium and cobalt, you name it, for batteries. Vehicle pricing is an interesting one. Joe just brought up. Right now we're still at record pricing, or close to it. It's softened a little bit, but it's still very high. I do think something's got to give there. I mean, the average monthly payment is well over $700, actually closer to $800 a month. New used vehicles, it's $500 a month, which I did a big story on this. New car monthly payments bumped around $400 and $410 a month for most of the past decade pre-pandemic. Pandemic, semiconductor shortage changed everything. I know the automakers love pricing, but they do need volume and they do need scale. And there are only so many used vehicles pumping out in the market, in the 1 to 3 year range. At some point, first off, I think they're going to have to start leasing again because interest rates are so high to get monthly payments down. The leasing's been down for the past 3 years. Once you do that, that increases the turnover rate of vehicles. I think they're going to have to start building more, and I think prices will come down. Not radically, but I don't think we're going to get to the $5,000 rebate game anytime soon. But you're going to have to see price go down and volume come up just because people want cars, and people a lot of people can't afford what's out there.
Okay, here's a good topic to wrap up the show. Different automakers are taking different strategies of how they're going to do EVs. So you've got Ford, Renault, and Toyota. And this is the one I really want to talk about, Toyota. Ford carved out Model E. Business unit's only going to do EVs. Renault did the same thing. They call it Ampere. And now, just in the last week, Toyota came out. We're going to do what they call the BEV factory. And, they announced this before, but now we know who's running it and all. And Gary, let's start with you. What do you think of these different approaches that the automakers are taking? You think one's better than the other?
Well, I think that basically this is something that no one knows the answer to, and therefore you're going to be trying different things. And there's something to be said. I mean, Mark Royce said on this show last year that he thought that there was good synergies that existed between the different types of people. Now, if we look further, and as Joe and David have mentioned, I mean, the type of people within organizations that are important to electric vehicles are not necessarily the same types of people who have long been making, transmissions and small block engines. But that said, I mean, I think that the only example that people can point to is say, oh, look, Tesla is completely dedicated to making EVs. That's the way we got to go. Well, but, if you think about it, they really didn't have, an installed base. They didn't have a structure that they had to deal with. And so I think this needs to be worked out with time. I'm not sure that we're necessarily going to say that one is doing it correctly and the other's not.
Yeah, I think that's right. I mean, I think that's right. And it kind of reflects the differences in the views of the CEOs and the people around the CEOs as to how to kind of get quickly to this goal of building EVs that can match Tesla. At Ford, they've decided we can't wait for our traditional ICE organization to figure out how to develop a cooling system that's appropriate to an EV and as opposed to an F-150. GM's taken a very different view, which, as you said, which is like, we don't want to separate our teams of engineers. We want to be able to deploy people and to whatever's the best target. And by the way, I mean, these companies have all operated differently for 100 years, so they probably will continue to operate differently and manage themselves differently. Um, I'm not sure if there's any one right approach.
I think supply chain is going to play a big role in that too, right? I mean, as they, right now it's so new. How much of the battery, how much of motors, inverters, all of those systems do the suppliers do versus in-house? I mean, Tesla's, compared to the rest of the auto industry, very vertically integrated. Do they start to send stuff out as they lower their prices and need to lower costs? We'll see. Does everyone else copy them, or do they train their suppliers and find new suppliers to do a lot of this? I think that's a big piece. I just don't think we know right now. I don't think we're anywhere near knowing, because other than Tesla, nobody has scale how all these vehicles are going to be built.
Right.
What do you think, John?
I look, and I've said this on the show many times. I think the right way to do it is start with a clean sheet and a whole new team of non-legacy people. Better off try to get them out of Silicon Valley if you can, because we're in the era of the software-defined car. And I don't think the legacies have quite figured this out, how to do it just yet. They're all working on it, but none of them have come out with a software-defined car yet. Tesla started that way. And I think that Ford, Renault, and Toyota have recognized the old way, the old processes, the old structure of the organization. It's not going to get this done. I mean, I was stunned to see Toyota doing this. They're even more conservative than General Motors is. And, they're very process driven, like GM is, very methodical in how they go about doing things. And yet they've decided they have to carve out an entirely new BEV dedicated business unit. I think those are the companies that are probably going to rise to the top, the ones that approach this like Tesla has done, with a first principles mindset. And we'll see if the others keep up. I mean, I'm not going to write them off. I think, what GM is doing is extremely intelligent, but I'm in the camp of the ones who say, nope, we got to bite the bullet and do it different.
So didn't Sandy Munro say in the show that he thought that Tesla would outsell General Motors? What was it, in 2028?
Yeah, he might have said something like that,
or even sooner than that. I mean, it was. I mean, so Joe, David, what do you guys think about that?
Go ahead, David, you first, and I'll see if I agree with you or not.
Look, when it comes to EV market penetration, market share tables, EV sales, like where's my dartboard? But look, I've got a ton of respect for Sandy. When he starts to veer into marketing and pricing and market commentary, he's a manufacturing cost and quality guy, and he's awesome at it. I don't think, he loves Tesla, and he hates the big three. For Tesla to pass GM in 5 years, they make 1 million EVs a year, and a little more than half are sold in the US. So they basically have to 5x their sales, and GM has to sink more. I don't see that happening. Could it happen one day? Look, that's a long way away if it does, because Tesla's got 4 vehicles, and they're going to launch a 5th Cybertruck at the end of this year. 5 models, and they're having their inventories are creeping up. Their pricing's coming down. They're still growing, but there are cracks in the armor here in terms of their whole growth model.
The question, yeah, I agree with that. And the question I'd ask is, forget about GM and Tesla. Who's going to catch BYD?
Yeah,
right. I mean, these Chinese automakers, and BYD is the leader. BYD is the biggest selling vehicle brand in China right now, and that happened fairly rapidly. And they've got Volkswagen and GM and the rest of the legacies on the run in China. Watch that space, because I think what's happening in China is pretty substantial and significant. I kind of agree with David. I don't know if GM's volumes are going to be surpassed by Tesla by 2028, but I do know that the Chinese companies, if they have their way, are going to reorder the league tables pretty quickly.
absolutely right. Hey, look, and that's probably the perfect note to wrap their show up on. But David Welch from Bloomberg, Joe White from Reuters. Love having you guys on the show. Great discussion.
Great to be on. Good to see you all.
Good chatting. Fun as always, guys.
That's right. See you later, Gary.
Okay, take care.
And thanks, everybody, for having tuned in.
Autoline After Hours is brought to you by Bridgestone Tires, solutions for your journey. And by Borg Warner, propulsion solutions that support a clean, energy-efficient world.
If you like this program and would like to learn more about the automotive industry, check out our website at autoline.tv or look for us on YouTube on the Autoline channel.